Welcome to another insightful session with Informed Invest. If you've been checking the news lately, you've probably seen those headlines screaming about gold and silver hitting all-time highs. 1 tola or 10 grams of gold has reached a remarkable 93,460 rupees. Silver, on the other hand, has reached 105 per gram, meaning it costs over 1 lakh for a kg of silver. And let's be real, it's not about the sparkle, it's about serious investment potential. The love affair with these metals goes far beyond just their aesthetic appeal. They're performing financial magic in portfolios across India. Gold, like timeless beauty, isn't just a pretty face. It's been flexing its financial muscles, outperforming every other major Indian asset class in 2024. And guess what? Even in the initial months of 2025, gold has continued to deliver impressive returns, making it a standout performer in the investment landscape. So, what's fueling the rally? Why are these age-old commodities suddenly reaching unprecedented valuations? Stay with us as we delve into the intricate world of gold and silver, exploring the reasons behind the soaring prices, the nuances of investing in each, and what the future might hold for these metals. Let's begin watching Informed Investor, an initiative by Equentis. The recent surge in gold and silver prices is multifaceted phenomenon, driven by a combination of global economic uncertainties, geopolitical risks, and domestic market dynamics. Let's break down the key reasons behind this trend. Gold is traditionally considered a safe haven asset, and ongoing geopolitical conflicts have reinforced its appeal. The prolonged war in Ukraine, escalating tensions in the Middle East, and the strained US-China relations have heightened global uncertainty, prompting investors to flock to gold for security. Secondly, the global economy is facing turbulence with fears of a potential slowdown and trade disruptions. After months of speculations, President Donald Trump has finally imposed reciprocal tariffs on imports from over 180 countries worldwide. This has raised concerns about a global trade war, further strengthening gold's demand. Additionally, persistent inflation across major economies has made gold an attractive hedge against erosion of purchasing power. Monetary policy also plays a crucial role in gold price movements. The expectations of interest rate cuts by the US Federal Reserve weakens the dollar, making dollar-denominated assets like gold more appealing to international investors. A lower interest rate environment typically boosts demand for non-yielding assets like gold. Central banks worldwide, including the Reserve Bank of India, have been accumulating gold. If you see the table on your screen, central banks around the world have extended their buying streak to 15 consecutive years, and remarkably, 2024 is the third consecutive year in which central bank buying surpassed 1,000 tons, far exceeding the 473 tons annual average between 2010 and 2021, and contributing to gold's annual performance. This strategic move not only signals confidence in gold as a stable asset, but also reduces its available supply, thereby driving prices high. And now, beyond the global factors, India has its own unique drivers for gold demand. The strong cultural affinity for gold, particularly during festive and the wedding seasons, significantly boosts demand. These periods often see a surge in gold purchases for jewelry and as gifts, contributing to price increases. The cyclical nature of gold demand in India due to these cultural events creates periods of increased buying pressure, contributing to prices surge. On the other hand, silver, often seen as a more accessible precious metal for investment in India, has also experienced a significant price surge. Silver often tracks gold's price movements, and a strong rally in gold typically drives silver prices higher in India. Known as the poor man's gold, silver not only follows gold's trends but often experiences even sharper gains during bullish phases. Then India has a significant industrial base that utilizes silver in various applications, including electronics, solar energy, and manufacturing. Growing industrial activity, particularly in green technologies and electronics, contributes to increased demand to silver. Silver's dual nature as both a precious and an industrial metal provides it with multiple demand drivers, potentially leading to more volatile price movements. Like gold, silver is also often considered a safe haven asset by many Indian investors, particularly those looking for a more affordable entry point into precious metal. Then, silver also sees increased demand during festivals and traditional uses in India. Lastly, the silver market has faced consistent supply shortages with demand outpacing production in recent years. This has created a strong case for sustained price appreciation. Now, while both gold and silver are considered precious metals and can play a role in an investment portfolio, they possess distinct characteristics that make them suitable for different types of investors and investment objectives. Firstly, gold acts as a safe haven asset maintaining its value during economic uncertainty and inflation, often moving opposite to the stock market. Silver, however, has strong industrial demand, making its price more sensitive to overall economic growth and industrial cycles. Silver experiences much higher price swings, often 2 to 3 times greater than gold, due to its smaller market size and dual role as an investment and industrial metal. Gold, in contrast, is a more stable asset with less dramatic fluctuation. Now, both metals provide portfolio diversification as they have a low or negative correlation with traditional assets. However, gold is a more reliable hedge across different economic conditions, whereas silver's industrial link makes it slightly more correlated with economic trends. Silver is significantly more affordable, making it easier for individual investors to accumulate larger quantities. Additionally, digital gold platforms have made fractional gold investments more accessible to smaller investors. Gold is preferred by conservative investors seeking wealth preservation, stability, and protection against inflation and currency risks. Silver, with its lower price and higher volatility, attracts investors willing to take on more risk for potentially higher returns, particularly those looking to benefit from industrial demand in emerging technologies. Now, in the world of investing, diversification stands as a cornerstone strategy for mitigating risk and enhancing potential returns. It involves spreading investments across various asset classes, industries, and geographies to avoid overexposure to any single area. This approach helps to cushion a portfolio against the volatility of individual assets, as losses in one area can potentially be offset by gains in another. Gold and silver play a crucial role in a diversified investment portfolio by acting as hedges against inflation and economic uncertainty. While equities might offer higher growth potential, they are also subject to market volatility. Precious metals, deeply ingrained in Indian culture and investment habits, tend to provide stability and act as a hedge against inflation and economic uncertainty. Gold delivered a strong performance in 2023 and 2024, even compared to other asset classes in India. This reinforces the role of gold as a valuable component of a diversified portfolio for Indian investors. The inclusion of precious metals in an Indian investment portfolio can help mitigate overall risk by providing a counterbalance to more volatile asset classes during market downturns. In an economy like India, where inflation has historically been a concern, gold and silver serve as relevant hedges to preserve the real value of investments over the long term. Their historically low or negative correlation with equities and bonds further underscores their value in a well-diversified portfolio. For Indian investors looking to add gold and silver to the portfolio, several avenues are available, each with its own set of advantages and disadvantages. Physical gold and silver. This is the traditional way of investing in precious metals, offering the satisfaction of owning a tangible asset. Physical gold and silver can be purchased in the form of coins or bars from jewelers, banks, and specialized dealers. While this provides a sense of security and independence from financial institutions, it also comes with challenges. Storing physical metals requires either investing in a home safe or renting a bank locker, incurring additional costs and logistic concerns. For gold jewelry, there are also making charges and GST to consider, which can reduce the overall return on investment. Selling physical gold might also involve some difficulty in obtaining the best price quickly. Silver, being bulkier and prone to tarnishing, requires more specialized storage. Second is gold and silver ETFs and mutual funds. ETFs, or exchange traded funds that invest in gold or silver, track the price of those respective metals and trade on stock exchanges like equities. They offer high liquidity, transparency, and eliminate the need for physical storage. Investing in gold or silver ETFs requires a demat account. While convenient, they do carry a small expense ratio charged by the mutual fund. Mutual fund that invest in gold or silver can do so directly in bullion, mining stocks, or through ETFs. They offer diversification within the precious metal sector, but also have expense ratios. Gold ETFs generally have higher liquidity than silver ETFs. The taxation of these gains from these investments depends on the holding period. Another method to invest is sovereign gold bonds, or SGBs, issued by the Reserve Bank of India on behalf of the Government of India. SGBs offer a secure way to invest in gold in a paper or dematerialized form. The advantage of SGBs is this: it offers fixed interest rate of 2.5% per annum paid semi-annually, in addition to the potential for capital appreciation based on gold prices. Capital gains on redemption after the maturity period of 8 years are exempt from tax. SGBs can also be used as collateral for loan. However, they come with a locking period of 8 years, although premature redemption is allowed after 5 years. The interest earned on SGBs is taxable according to the investor's income tax law. Lastly, there is digital gold. This modern approach allows investors to buy and sell gold online, with the purchased gold being stored in secure vaults by the platform provider. Digital gold offers several advantages, including accessibility, investments that can start from as low as 10 rupees, convenience, that means no physical storage needed, and liquidity, that means easy to buy and sell online. While they are not directly regulated by financial authorities like the SEBI or RBI, digital gold operates under strict industry guidelines and reputed custodians. Platforms like Google Pay, PhonePe, and jewelers like Tanishq and SafeGold offer digital gold options, making it a flexible and easy way to invest. GST is applicable on purchases, and capital gains tax applies upon selling. Now comes the biggest question: is it the right time to buy gold and silver? Now, if you're wondering whether now is the moment to jump into gold and silver, let me break it down for you. Both metals have had a phenomenal run in 2025 so far, with gold hitting historic highs of over 90,000 per 10 grams and silver crossing 1 lakh per kilogram. Despite these record levels, experts believe there's still room for growth, making this an intriguing time to consider investing. For gold, analysts are optimistic about gold's continued rally. Factors like geopolitical tensions, which is a Russia, Ukraine, Israel, Gaza, inflationary pressures, and a weakening US dollar are expected to keep gold prices elevated. Central banks are also ramping up their gold reserves, which adds further demand. Goldman Sachs predicts gold could climb another 8% by the end of 2025, potentially reaching $3,100 per ounce. Silver, on the other hand, is stealing the spotlight with its dual role as both a monetary and industrial metal. If prices surged 11% year to date in 2025, and experts believe it could double this year due to its relative undervaluation and strong industrial demand. Sectors like electric vehicles, solar panels, and 5G technology are driving silver demand, while supply deficits, projected for the fifth consecutive year, are adding upward pressures on prices. Silver could apparently be the real start of 2025. Now, to conclude, gold and silver have truly stolen the spotlight in 2025, reaching record highs and proving their worth as timeless investment options. Whether it's gold's stability during economic uncertainty or silver's dual appeal as a precious metal and industrial metal, these assets have demonstrated their ability to outperform other asset classes. Looking ahead, the future remains bright for both metals, with factors like inflation concerns, geopolitical tensions, industrial demand, and supply deficits expected to drive prices even higher. While gold offers a safe haven for conservative investors, silver's affordability and growth potential make it an exciting choice for those willing to embrace some volatility. If you're considering investing, now could still be a great time to add these precious metals to your portfolio. Remember, diversification is gold and silver can act as hedges against inflation and economic turbulence while providing long-term stability. So, whether you're looking to preserve wealth or capitalize on future growth, gold and silver deserve a spot in your investment strategy. As always, invest wisely and align your choices with your financial goals. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.